he had just paid me like a $10,000 commission, right? Again, I'm still in my 20s going like, sweet, right? 10 grand. Did that in a couple weeks of work. You know, I was a little cocky about it. Like, this is awesome. And the guy was like, you know, that's great. Congratulations. You worked hard. You earned that. But to give you some perspective, your check is not enough to fuel my jet. That was very humbling. Thank you. And he's like, and then one day I asked him, like, how did you get where you are? And it was, well, I started off and I would go to buildings and I would maintain their parking lot. So I'm sweeping the parking lot.
Hey, this is Bo Barron, owner and managing director of Barron Commercial Group. And he's zoning out right now, but that's Timmy Barron, ADHD, actor and comedian.
Oh, are we doing that?
I'm already done with this. Hey, let's start over. Hey, this is Bo Barron, owner and managing director of Barron Commercial Group,
And then this is Timmy Barron, owner, and I don't own much. I'm an actor. I'm learning about commercial real estate. He's teaching me about commercial real estate.
What's the name of our podcast here?
Commercially Speaking.
All right, let's do it. What a train wreck.
Bo, what are you teaching me today?
Well, we have a guest today.
Who?
We have my buddy Brad Ahrens.
I know, you told me.
Well, what'd you ask for?
That's what I asked for. It's for the listeners.
Well, Brad and I met because we were both coaches at the Mossmo Group. And so, man, that probably takes us back about 10 years. So I know Brad for a long time. Over the years, both of our businesses have developed. And to some extent, we're doing a version of the same thing. Though, as I was telling you before, I think I'm doing kind of the mom and pop version, and he's kind of doing the sophisticated big leagues version of it. And so he was gracious enough to agree to come on the podcast. And so now he's here.
Brad, thanks for being here.
Guys, thank you so much for having me.
Brad, for the listeners and for me, can you give us like a 5-minute origin story?
As we sit here today, I am the president of Concord Development Partners. We develop and acquire senior housing, multifamily throughout the Western United States. Been in commercial real estate since 2000, so 23 years. Actually got started as soon as kind of halfway through school, started working on this model where we would syndicate and wholesale single family homes, right? I think I literally sat back one day, paid $100, purchased a Carlton Sheets, how to buy homes with no money down program.
Is that right?
Yeah. And we had, in essence, had created, like, we'd go out and like, so this is a funny story. So we had brought on a bird dog. If you guys don't know, a bird dog is like a guy who goes out and identifies leads. And the crazy thing about our bird dog was he was actually blind.
Oh,
he got us in front of more deals than anybody else I've ever worked with.
How disarming would that be for somebody,
right.
You know?
Right. And the last deal he presented to us, we bought in Phoenix, Arizona, and check this out. The parcel number was 000-00-001.
Whoa.
Yeah.
Huh.
Yeah. Anyways, so we kind of continued that model, and we got to a point where we were just flipping contracts, wholesaling deals.
Okay, let me stop you. Would you just explain flipping, wholesaling, just the short definition of those?
So flipping, let's say you close on an opportunity, do some rehab work in a short period of time, and you flip it, right? Think about the HGTVs, programs out there, fix and flippers, right? Wholesaling is, let's say I have a property that's valued at $100, right? I tie it up for $70 and I assign my contract to an investor for $80. So without even closing on that deal, we'd make $10. Now multiply that by a couple of zeros, and we kind of got towards like 04, 05, probably did more wholesaling contracts where we could actually open escrow on deals. We've done deals in Texas, Florida, Ohio, Maryland, a number of different states where a lead would come in. Someone would have to fill out a form to submit their deal. They would provide a valuation. And so we take it in, we got our investor network, we put a little teaser together, and I would normally have a new buyer or an investor ready to go on that deal within like an hour.
Whoa.
So it would be like, you guys are shopping for a house.
Right.
So you put one under contract. He said open escrow. We would say here in Kentucky, we put it under contract. And then you call me and I buy that contract from you for say $10,000 more than you put it under contract. And then I go close on the deal.
Whoa. Are you able to do a ton of those at once?
at a high rate of speed. And he had, his investors at the ready. And
Yeah. So kind of crazy. So again, I was 23 years old, and, of course you had to put your first check in a box. So this was the first deal that my blind bird dog brought to us, and we made $12,000 in 2 weeks.
Oh my God. So I'm an actor. Oh man.
I mean, there's a lot of job openings for actors right now.
yeah, all of them.
Well, not unless you're in SAG.
Anyway, so that model for us worked out really good till about 2007. And then, as you guys know, housing market skyrocketed. We just simply couldn't compete against an owner user. So it would actually occupy the home. So then in 2008, jumped into brokerage, commercial real estate brokerage.
Good timing.
Brokerage was kind of moving along like this. I got introduced to the Massimo Group in like 2009, 2010. I got coached by the Massimo Group. Business literally went from kind of flat to crazy. We ended up doing one of the biggest deals in Arizona in like 2010, 2011. I got recruited to go from a boutique firm to a national firm, join an elite team, got featured in the Massimo Group's Brokers Who Dominate. And then, most people be like, oh man, you're like on this huge trajectory. And at the end of the day, I realized that investments, that's where the passion lies. Because I kind of hit major milestones on brokerage, it was like, nah, I'm going to go back to investments. In 2011, 2012, I started a company called BKA Equity Group with my dad. And the whole goal was to chase opportunistic value add industrial assets coming out of the Great Recession. We did that for a couple years. And then tragically, our family was impacted with a family member who had Alzheimer's. And just trying to find a place for grandma, you just realize that at the time, there just really wasn't great options that you would feel comfortable putting a loved one in. So me and another partner, we formed another company where we started developing senior housing throughout both Arizona and California. And, from that point forward, we've continued to develop senior housing. We built a couple multifamily projects, in addition to Concord Development, which is developing senior housing and multifamily. We also have what we call a sidecar vehicle, meaning like kind of tags along with us that can chase just truly like commercial investments, value add. That's not kind of our core business, but we have capital allocated for it.
You were talking about, you were an investor first on the single family side, then you became a broker, and then you decided, you know what, I think I'm going to head back to investments. And when I started my career, I was working for my dad. I was working in his brokerage company, but he was an owner, he was an investor. He had these properties. It stabilized everything. So my income was up and down and all kinds of, the crazy brokerage, go a couple months between a deal and not get paid. And
I can relate.
So I was feeling all this anxiety, and my dad's over in the office over there, just chill, because rents were coming in. And I was like, man, how do I get from this chair to that one over there? And it was both of our coach, Rod Santomassimo, he interviewed a guy named Gene Trowbridge, who is an attorney for syndicators, and he was a former syndicator. And that was the first time I heard about what group investing actually was and how it could be a possibility. And it's like a light bulb went on for me. It's like, this is my path from this chair to that chair.
Yeah.
And that's how I got there.
So when we were chasing in brokerage, right? This is 2010, 2011. In Phoenix, number of deals completed came to a screeching halt. 2009, like 8, 9, 10. Now we're like 20 or 30% below replacement cost or what it would cost to build that building. I had ultimately aligned myself with an institutional buyer. And I'm like, look, you guys need to be paying attention because, yes.
I'm going to need you to explain institutional buyer.
Okay. So we categorize, like most, the different types of investors out there. There's non-accredited, meaning they don't hit certain income and liquidity and net worth qualifications. There's accredited, individual accredited, right? They hit income, net worth requirements. Then there's a whole bunch of categories in the middle. And then your institutions, like think about publicly traded companies that invest in real estate. right? REITs, real estate funds, pension funds, sovereign funds, insurance companies. We would categorize all of those as our institutional investor. Like,
Oh, it's in the name.
Yeah.
yeah.
That I did need the explanation. Thank you.
So what we did is I've been talking to this guy for a couple of years, and I'm like, hey, why don't we do this? I'm going to create an entity, right? We'll call it ABC Opportunity. If you find something that's interesting, you'll close on it. And so I would cold call like 50 deals that this buyer had approved for me to call on. Then I would write an offer on behalf of ABC Opportunity because this institution had given me a box to play in. You offer this term, this earnest deposit, this, and this. You get this tied up, then you can assign, we probably just did a transfer of paper right before opening escrow or signing contracts. We just redid it. But ultimately, we had like 3 or 4 deals going at any given time that I could put that entity out there, that they're in the market. We get something tied up. Big institution over here actually goes under escrow. I'm paid a fee for doing so. And you start to think about like, man, like I did all the work to source the deal. I did all the work to negotiate the deal. I put it under contract. Let's scrub across the cobwebs of this is exactly what you did 9 years ago. Instead of getting a fee for all this work, you're already doing everything. Why don't you just now figure out how to buy it or stay in the deal and joint venture with that institutional partner?
Now, we had an episode with Jeff Ingolstadt, and he talked to us about GP/LP. And so Timmy's got a feel for, general partner, limited partner. But I don't know that we've ever had anybody talk about what a JV is or a joint venture.
No.
Okay. Would you mind unpacking that a little bit?
No problem. So what's funny is that if Gene was on this call, he would want to correct all of us that theoretically GP and LP is the entirely wrong term that everyone uses.
Yeah, I would agree.
We'll keep it simple. So general partner, limited partner, right? Think of GP runs the deal, LP invests passively into the deal.
Yep.
So in the simplest of terms, your institutional partner out there either wants to actively invest or will invest with great sponsors or great GPs. Like if the 3 of us were to do a deal, right, and we invested in a general partner over here, it would be syndicated between me, Bo, and Timmy. A JV is simply if Bo raised his hand and said, I got all your equity, right? Instead of bringing in others, you and I just form a venture and we will take it down together. I want you to put some skin in the game, but I'm going to be a majority of your capital. And that's it in the simplest terms.
Brad, you were sharing how it was really your family member dealing with Alzheimer's that led you into senior housing and that kind of. I've been thinking about low-income housing tax credit development. And the reason I like it more than just developing something that'll be profitable, I can positively impact a community. And I didn't realize that was kind of your entrance into that space. I love how there's meaning behind it.
So everything we do, we like it to make an impact on the community, right? So if we can deliver a best-in-class senior housing community for mom and dad, everyone feels comfortable with your parents being there. They get the level of care that they need. And then when we look at multifamily, within the building itself, what kind of social environment can we kind of create? It's almost like this mini neighborhood where it thrives versus just a place where you live. I mean, even when we were doing industrial, our whole program was actually built around identifying a business who needed to relocate and was tired of dealing with landlords, where we would figure out what they needed. And then in essence, we created like this tiered program of, okay, so depending on how much support you need, here's tier 1, here's tier 2, here's tier 3, that we can seamlessly transition you into this building, renovated to your specs so that your business can thrive, versus the normal model of a constant negotiation to want my business to thrive so I can make the landlord more money. We're just kind of taking that kind of client-centric approach first and then using real estate as a means.
One thing that we haven't talked about much, or I don't know much about, is the whole development of it. Because with you, it's like a buy and sell. Brad, with you, there's a whole development aspect of this. Can we talk more about that?
Sure. Normally for acquisitions, you're kind of looking at, the earth and above. On development, I'm looking at the earth and below. So there's a bunch more of like site due diligence work that has to go into place, making sure I can get served by utility companies, roadways, infrastructure, on-site improvement, off-site improvements. Last deals that we developed for senior housing was actually in Southern California. Very hard place to develop. There's a lot of regulations for zoning, entitlements, environmental. On this particular deal, I think we went under contract in 2018. It took us 2 years to get to a point where someone is ready to hand me a permit where I can begin work. So the second someone hands me that permit, I can finance it in the same way as you would acquire a building. The difference is all that money that's spent to get to that permit is theoretically at risk. I have a partner who has liquidity, who can help fund these pursuit costs. And then there's the whole political side of zoning a project where I have to basically persuade or help a publicly voting body understand why this project makes sense here. We like an older product that we can actually demo and build new. So this was, in essence, there was like a 40 or a 50-year-old office building that had been in this very like high income area. And so it was slated, this whole area was slated for retail and sales tax revenue. And so we actually had to work with the city to help them understand like, hey, you guys actually have plenty of retail. So thinking about sales taxes from the sale of goods, what you do have is an aging population, and there hasn't been a new product delivered in 25 years in your neighborhood. You guys want mom and dad to have to relocate out of your city, or can we give them an option to stay here? And I know you're trying to hit, budgets on sales tax revenue. We're going to have somewhere between 100 to 120 full-time employees. Lots of families come in who will then disperse money throughout the neighborhood, right? Creating kind of ancillary sales tax revenue. Plus part two, the amount of revenue, sales tax revenue you're going to earn on this new construction is way out going to pace probably a couple years if this was just traditional retail. You're just trying to paint the story of like, why here, why now, why this?
Yeah.
And then in California, there's a whole environmental, they call it CEQA, California Quality or Environmental Quality Act. And that is...
Man, that sounds like a lot of fun. Wow.
I will tell you, we had a team. It was a big project. We knew it was going to require some horsepower. We brought in a JV partner out of Colorado, and luckily our team synergized really well. We made more fun of some really challenging situations beyond any other project I've ever worked on. We had like this little thing we would do every time we'd go into a meeting with the city, driving to our public hearing first time, like we're cranking like Megadeth, driving down the road.
Yeah.
We had fun. We had fun with it.
You seem like you'd be really great at painting the picture. And it all goes back to there is a deeper why that it would be really hard to do that if you were not fueled by something deeper and surrounded by good people,
Yeah. And just the ability to not only tap into what a deeper why is, but tell a story, like be able to tell the story, which is what probably where you just knocked it out of the park, and we were able to get Southern California folks who you needed to be on your side. You were able to get them on your side by telling them that story.
Yeah.
And and those stories are important. I think my point is like the stories that are fueled by a deeper why is a story to be listened to.
Right.
Yeah.
That's what I love about the business is every deal has a story, and it's just whether or not you can dig deep enough to know that story. Sometimes that story, one, creates that relationship with the seller, and two, now you kind of know like what went into it. It starts to resonate versus just like, hey, here's building A, it generates X cash flow, you're going to make Y. For brokers, right? When you're doing your listing presentations, you're painting that picture. Let me walk you through what it's going to look like to invest with me.
even after you get the listing as a broker, the best part of selling the deal is telling the story. Like this morning, I showed our sister's property. And I took a guy through this industrial multi-tenant building that our sister has and is selling. And I got to give him the context, the story on what led her to want to sell this, which answers a lot of questions. Every property you ever take a look at exists in the context of the market that it's in. And there is a story wrapped around it, like a real nice piece of steak wrapped in bacon, Like you don't want to forget the bacon. I can't believe I just used a bacon analogy.
It's not like we're crackling up or anything, but it smells good.
All right. Brad, we had a conversation yesterday where we were talking about how a lot of the brokers that we know just lack insight on what the investment side looks like. Our podcast is specifically for people who want to invest and use space. But we have a lot of brokers listening to this as well. And just give them a feel about what you're doing with Rod and the Mossimo Group and what's going on there.
I'm at a point in my career where I get nothing gives me greater joy than to be able to pass along information that can help others, in essence, reach their dreams. You look back, like I had mentors, plenty of people gave me tips, advice, and helped me along the way. One thing that we started looking at is when people get into brokerage, they get into it because they probably have a friend who's in their 20s, maybe their 30s, they just bought a boat, they bought a nice car, and then you continue moving forward, you do more and more deals, and then you start to pay attention to the folks you're working with. And you might start asking like, man, like how'd you get to this point? I did the same thing. I remember we were repping this office building, this ultra high net worth guy, and I'll never forget. So he had just paid me like a $10,000 commission, right? Again, I'm still in my 20s going like, sweet, right? 10 grand. Did it in a couple weeks of work. I was a little cocky about it. Like, this is awesome. And the guy was like, that's great. Congratulations. You worked hard. You earned that. But to give you some perspective, your check is not enough to fuel my jet. That was very humbling. Thank you. And he's like, and then one day I asked him, like, how did you get where you are? And it was, well, I started off and I would go to buildings and I would maintain their parking lot. So I'm sweeping the parking lot. And then they'd ask me to do more. And eventually they asked me if I wanted to participate and buy this building. And then I did and repeated it over and over. So you just start to ask like, what's your story? How did you get where you are? There's so many brokers who, they may invest in deals, but it doesn't mean you're running an investment deal. Big difference. Anybody could stroke a check and invest in someone else. But to make that transition from representing to now I'm running and acquiring requires, and believe it or not, it's just a really kind of simple mind shift of thinking about how you're doing things now and just changing, right? Just changing that shift. The fundamentals are still there, but it's just a mind shift. And so me and Rod Santomassimo, founder of the Mossimo Group, last year we came and developed this program called CRE Investor Coach. It is 100% geared to real estate brokers who've been in the business for a while. They've done a bunch of deals. They're kind of moving forward, and they are at a point in time where they're ready to transition either out of brokerage into investments or use it as a vehicle to complement their personal goals. And so we launched our first program. We made the announcement, actually, Bo, in Dallas. I think I was wearing like jeans and Vans because I was halfway out the door to catch a flight, and Rod calls me up. He's like, hey, come up on stage. Like 15 minutes. And I'm like, we were supposed to do this yesterday.
Yeah, that's right.
You're fine. You're fine. It's, it's only like, leaders in the industry that are presenting before and after you. So you're fine. Come on up. So yes, we launched our first program January of this year. We've got, a great group of folks who've been in the business for a while. They've all invested at various degrees, but always passively. So we're now 6 months in, and I think as a group, we have transacted on 5 or 6 deals. We've got another 3 or 4 deals in the queue that we're talking about every month, and we're getting ready to launch program number 2 September-ish. The most amazing takeaway is we've got a couple guys that are capital markets, brokers, meaning they deal with debt, equity, and investments. And on average, they're like 7-figure income producers. So they're netting, in excess of $1 million, and having them walk through deals, right? As an owner, they're like, guys, like I had no idea. No idea.
Well, it's surprising too, because like you would just automatically assume guys dealing with deals that size would just know that stuff.
You specialize in what you know. You think about how many owners out there, investors out there are like, oh, it's just a broker. But as a, former broker, other brokers, like, you have no idea how hard we work to gain your trust. And on the flip side, to buy a deal, brokers have no idea how hard it is to actually underwrite, due diligence, and close and manage that deal start to finish.
And I don't think I've ever really thought about this before, but like I knew that stuff because I watched our dad do it. And so even though like when I came into the business in 2004, I was brokerage, pure brokerage, but the company managed the properties. I watched dad look at deals. I watched him buy some things. I watched him invest. I got to see that and kind of ride shotgun on a lot of that stuff. And I've never really thought about how potentially unique that is.
There's a parallel that as an actor, when you're in front of the table doing an audition and the casting directors are blah, 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 whatever. And then you walk out. When you're on the other side of the table, where all of a sudden I find myself casting, some sketch show or, you immediately get this insight into what they are thinking. They're not thinking, oh, this person sucks or never. It's just like, oh, they're not right for the part. Not to get into that, but just the parallels are huge.
Right.
With the storytelling too. Like that's
right.
That's everything. I don't think I ever understood how much storytelling happens in this sector or how important it is.
Yep.
Like at CCIM or any of these places where you learn commercial real estate in any way, shape, or form, Matsumo Group, are there storytelling classes? Because I can see like storytelling and improv to be in that moment and to listen to yes and problem solve and collaborate just could be so beneficial.
I've never really seen a really great educational system on the soft skill side of things. Have you, Brad?
No, the only thing I've ever seen is just mirroring. There's been two people that have entered in my life in this business who proactively told me is like, when I got into real estate, I envisioned, because maybe I was surrounded by other successful folks, that I'm supposed to look like this, dress like this, talk a certain way. And for whatever reason, it never worked, right? It wasn't me. And I came across as insincere and fake.
I love it.
And he's like, one day I just said, F it.
Mm-hmm.
I'm going to have my spiky hair. I'm going to dress, professionally, but the way I want. And I'm going to communicate with people as if they were my friends. And he's like, all of a sudden there was like that weird, veil taken down and people saw the sincerity. And he's like, now I'm like a top producing broker in my market.
Yep.
That's what's great is you can make this business whatever your personality so desires. There are people who resonate with you and others who won't.
Yeah.
And there's how many billions of people in this world?
Look, there's a core principle behind what you just said. And it's that it's impossible for you, you, Timmy, me, it's impossible for us to serve everyone.
Right.
And so if that's true, man, let's be our sincere selves and attract the people we're meant to serve.
Right.
And that'll be more than enough. Right. So we don't have to be all things to all people and then just be the watered down, buttoned up, boring versions of ourselves. And I love what you're saying there. I think that's the big deal. I'm thinking of a guy in Austin, Texas, who he doesn't look like anybody else in the business, but he's himself and it's different, but he's great at what he does and he has a lot of success. And
I've got like a smile plastered on my face.
Yeah.
I love it so much. Yeah. I love it so much. It's so true. And it's a parallel to the universe I live in. When you're trying to be something you're not because that's what was taught or that's what you're told you're supposed to do, that comes with desperation that everybody smells, and whether they know it's desperation or not, it stinks because it's bullshit and that's what it smells like. But yeah, when you are able to free yourself up you book more roles.
Hey, I wanted to get back to the program. If somebody listening is interested, the program that you're doing with the Mossmo Group, like where should they go?
CRE Investor Coach.
CREinvestorcoach.com.
.com. All right.
But look at that.
You're all over it. Okay.
I take notes, Bo. I take notes.
Do we want to move to a quiz, or do you have more questions?
Let me ask this, because I know, and you mentioned it, you're interested in moving into the low-income housing a little bit, right? And that would involve development, which is kind of a new beast for you.
Yes. And scares the crap out of me.
Right.
Yeah.
So we've got...
But why?
Yes, but why?
Oh, well, I have expanded projects. So I have had things built before, right? But I've never taken anything from the ground up. So there's the unknown of the process. Just the pursuit costs. I like that term. I don't think I'd heard that term that way before. But the pursuit costs of 2 years in Southern California, like you got to have more money up front, and your investors have to be way more patient and will probably expect a bigger return. And there's just a whole lot more moving parts. So all those things are in the unknown, haven't quite done it yet category. Therefore, it scares me.
Can I ask you a follow-up question?
Sure.
Because I think this will resonate with anyone trying to get into investments. What is one thing that could probably eliminate all of those fears?
Well, I'd collaborate with somebody who has done and is good at doing all of those things.
That's it. But I mean, also what's intriguing, like you, to low-income housing is because there is such an affordable housing shortage throughout the U.S. And in a lot of ways, they've done the zoning work for you. So it might be like we're looking at a deal that is currently an office building, and we found out that the city rezoned that property to multifamily. And so the work on entitlements and zoning is done. So they kind of took that lead time of, let's say, 12 to 16 months. And now how long will it take you to, draw plans, schematics, design DDs through construction to pull that permit? Plus a lot of ways you could also reprogram an existing multifamily deal and portion up 20% for affordable housing. Yeah. I mean, it all starts with talk to guys who have done it before, find a site, do it together. When we coach this CRE Investor Coach program, every member would say is, I can tell you how to do it till I'm blue in the face. But when you'll learn is when you're in the trenches working together, you will learn more in that, due diligence period than anything I or probably anyone could ever teach you.
Completely agree.
Yeah, all that.
Well, I've experienced versions of that before.
Sure.
But yeah, not on the development side.
I always find like the fear of the unknown leads to more thought, which leads to less action, which can lead to more fear.
Right.
Just doing it, you are going to learn all those things that are unknown. And that's it.
Yeah. I'm prone to overthink. And so a lot of times I just have to start moving. I can paralyze myself and overanalyze. And
we all can.
Like you and I are opposite ends of the spectrum there, which is why would be more risky.
Well, yeah, and Dad's more like you too. Like he makes a decision on a dime and he's already moving. And I'm like, whoa, let's think about this for a second,
Right.
And we worked together very well for a lot of years because he kept me moving and I kept him thinking. And it was a really nice dynamic.
All right. I'm ready for a pop quiz now.
You ready? Okay.
Yeah.
All right, pop quiz. All right, Brad, you want the first question?
Yeah. So, Timmy, what's flipping?
Flipping is when you buy something, you rehab it, and then you sell it for more. It's typically a fast, quick process.
Okay. All right.
Yep. Nicely done. How about explain to me what a JV is? What's it stand for and what is it?
It's a joint venture, and my understanding of it is you're going to invest. It's the two parties, it could be more, are all investing into the deal together. Is it closer to equal amounts, right? Like a 60-40 or joint venture is investors coming together.
I mean, it could be, but it often isn't.
Yeah. The capital comes from the business.
Brad, what would you say?
So you're close. You're close. A joint venture is when I bring in, normally, typically, one party, one company that's going to deliver almost all of my equity. And it normally happens towards the latter part of that deal cycle before you close.
Yeah, I was not close. I said the opposite.
It's generally a company or an institution as opposed to an individual who would then just be your partner. Yep. Brad, question 3.
I can do hard ones.
What? Oh, we want hard.
Well, we can. We can do hard ones. Don't take my poor answer on that one as I can't answer a hard question.
How would you define an institutional investor?
Good question. An institutional investor is it's a company or an institution that is putting up the money for the investment.
Okay, well, I have a company. Like, would I be an institutional investor?
No, but if you used Barron Commercial Group, if you represented Barron Commercial Group then you'd be in a joint venture. Hold on, let me look at my notes.
No,
I was like, oh, it's in the name. I remember that joke. Typically, you got like non-accredited, accredited, and then we've got the institutional investor.
which is, what are they?
The institution invests in the deal. I need help.
They're big institutions. So life insurance companies, pension funds, they're big dollars.
REITs, publicly traded.
Real estate investment trusts, they're the big boys.
So in an industrial investor, it is typically the business.
I think you just said industrial. You meant institutional.
That is what I meant. Yes. Yeah.
They're the big ones.
Yeah.
Yeah. Okay. Thanks for bearing with me, guys. I can still take hard questions.
Okay. So question 4 here. I have, I used a term earlier, soft skills. How would you define soft skills?
Like to pitch to somebody, the human interaction, I think maybe is what I'd say.
I think that's a real concise way to put soft skills, is the ability to connect with another human.
Right.
Quickly, effectively, in a way that you can advise and influence, and storytelling, negotiating, just the ability to have engaging small talk and build connections and all that.
What's funny is the parallels that I see between y'all's industry and mine are so much the same, but when it comes to that, it's the opposite. So if we're defining soft skills in this way, I went and studied soft skills, or we could say my hard skills are your soft skills, right? But we are not taught the business of how to market yourself, how to manage money.
I see what you're saying. Yeah.
But we're not taught, well, what do you do if you go 12 months and you haven't booked anything, and right?
Yeah.
Interesting observation.
All right. Nice job.
Thank you.
Brad, you got the honors. Question number 5, our final question.
Let's see. Question number 5. What is...
Sequa.
It's not the final question, but what does CEQA stand for?
California Quality Assurance?
Close. California Environmental Quality Act.
Oh, Quality Act. Yeah, okay.
But my final question is, what is desperately needed in this country that Bo's working on, and what is the acronym for what it's called? This is like a 2-part. Yeah.
LIHTC, LIHTC, Low Income Housing Tax Credit. What I say about those hard questions.
Nice job.
Very well done. Look at him.
Recovered. Look at this, getting goosebumps.
He totally redeemed himself.
Just when I think you couldn't be any dumber, stupider,
Yeah, it couldn't be any dumber. You go and do a thing like this.
totally redeem yourself.
I love Goodfellas. That was that movie, right?
Oh, it's so good.
Oh, my face is starting to hurt. Brad, thanks so much for coming on. If people want to connect with you at all, like where can they find you?
So they can find us online. So in addition to CRE Investor Coach, our website is cdpdevco.com. You can plug in Concord Development Partners. We're also on LinkedIn. Just look up my name, Brad Ahrens. We're on Twitter, Facebook, all that jazz. We are readily available to help in any way we can.
You guys are going to be launching a podcast sometime soon as well, correct?
Yes, we are. So it's kind of crazy the way this conversation is going. So we're going to create a podcast about stories, the story behind how you got where you are, the good, the bad, the funny. It's in planning stages now, but we hope to be rolling it out by end of this year. Would love to have you guys back on. Kick this off, and it'd be great to continue to collaborate. This has been a lot of fun.
It really has been. Really has been. Yeah. I like Brad a lot. I like you, Brad.
Thanks, buddy. I like you too.
Brad, give your family our best and have a great weekend. Thank you so much for your time, my friend.
Sounds good. You guys do the same.
Talk
See you,
soon.
man.